Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market outlook. The dollar slid across the board in the first half of the week, breaking below the 98 mark. July CPI showed only a modest rise, keeping the door open for a Fed rate cut next month. Markets now see September easing as likely, especially after last week's soft jobs data. If the Fed cuts rates back to back, the gap with higher yielding currencies could narrow quickly, adding more downside pressure to the greenback. WTI crude traded near $62 a barrel on Wednesday. Traders are eyeing US inventory data and signs that demand could soften as the summer driving season winds down. July CPI showed import prices rising on tariffs, pushing core inflation to its biggest monthly gain in 6 months. Diesel demand, a key driver for oil, appears to be weakening. OPEC and the EIA both see production climbing this year, but US output may fall in 2026. Spot gold extended its rally for a second day on Wednesday, climbing as high as $3,370 after rebounding from $3,331 the day before. July CPI came in largely as expected, reinforcing bets that the Fed will cut rates in September and keeping the dollar pinned near 2-week lows. That supported gold as a non-yielding asset. Still, upside momentum looked limited, with safe haven demand tempered by the possibility of a breakthrough at the upcoming US-Russia summit. The dollar fell against major currencies on Wednesday, slipping to 147 against the yen after softer US inflation data. This added to hopes of a Fed rate cut after summer. Uncertainty over the Bank of Japan's next hike, coupled with cautious optimism, has kept safe haven yen gains in check. With no major US data ahead, focus turns to key Fed speeches, Thursday's PPI, and Friday's preliminary Q2 GDP from Japan, potential catalysts for more USD JPY movement. The euro pushed above $1.173, its highest in nearly 3 weeks, extending gains as the dollar hit late July lows. Softer US inflation strengthened expectations of a September Fed cut and lifted global risk sentiment. In Europe, the ECB ended its year-long easing cycle in July after 8 rate cuts, keeping borrowing costs at their lowest since late 2022, though another cut by year-end remains possible. The Eurozone posted 0.1% GDP growth in Q2, with inflation steady at 2%.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.